I'm
take on
literally looking,
Bitcoins?
by the way, Bitcoin broke 100 like November 24. We're
November 24th, just a
6
year
grand
ago.
over 100 right now.
Yeah.
So we're within 6% of the price 50 weeks ago, not 52 weeks ago. So not quite a year. Like, and it went to 74 in between there. And then it's kind of held 100 now for, the bulk of the year. But Bitcoin hasn't really gone up in a year. I mean, there was a point in, I'm looking December, like right around Christmas, where it was 109. Remember, it topped at 109. That's above the current price at Christmas last year ish. Yeah, it's been a pretty good, and gold has, done what gold has done. The S&P is up massively. Everything's up, and Bitcoin really isn't. And altcoins are down mostly.
In a world where almost every major asset is soaring, Bitcoin has stayed flat, absorbing volatility and holding above $100,000 for most of the year. Bitcoin analyst Scott Melker observed that liquidity is the engine of markets, and once policymakers abandoned austerity in favor of expanding debt and trying to grow out of the problem, the path became obvious. If leaders want to avoid recession, especially before elections, flooding the system with liquidity is the most likely strategy. That backdrop creates a strong setup for risk assets across the next year. Interestingly, even as stocks, gold, and tech hit new highs, Bitcoin has stayed flat, which ironically strengthens the argument that it behaves as an uncorrelated asset, something investors have wanted for a long time. Melker also emphasizes the debasement trade becoming mainstream. Major financial names like JPMorgan, Citadel's Ken Griffin, and Paul Tudor Jones are openly discussing how to hedge against currency debasement, and every strategy includes Bitcoin, gold, or tech stocks. Jones even adds NASDAQ, saying capital naturally flows toward big tech in a world where the Mag7 is the market. At the same time, there's a massive catalyst waiting: over $7.5 trillion parked in money market funds. That yield will drop as interest rates fall, and wealthy investors will move that capital back into assets. Even without new stimulus, that sidelined capital alone could reignite markets. Yet despite this bullish setup, Bitcoin hasn't moved much in a year. It hit $100,000 last November and is still in the same zone, while gold, S&P, and tech have surged. Altcoins are mostly down, and Ethereum is below its spring highs. The setup is strong, but Bitcoin hasn't participated yet. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
We're going to just see a ton of liquidity, and liquidity drives markets. I mean, the minute that they gave up on the austerity talk and said, we're going to grow our way out of this as we add trillions to the debt, it's pretty clear exactly what they plan to do. You can handicap your bets on whether it will work or not, and that's obviously up to you. But as I said, I don't think Trump wants a depression before midterms. So I think that we have a very good setup for the next, 10 to 11 months. Your point about what is or is not a risk asset is definitely worth discussing. I think it's very interesting that gold continues to kind of climb towards highs or consolidate under them now. S&P continuing to make highs, tech continuing to make highs in this very long consolidation period where Bitcoin languishes. And the holy grail for investors is to have something that is not correlated, even if that thing goes down when all the other stuff goes up. So I think that Bitcoin actually, even though it hasn't gone up like everything else, it's a great case for having it in your investment portfolio and showing that it's uncorrelated, which I think we've been screaming about for a very, very long time. But I do think that we still have the ingredients for an everything bull run. And if you listen to Paul Tudor Jones, for example, talking about the debasement trade, which that term that Bitcoiners have been screaming about since 2008 is finally really catching mainstream, like attention, because JPMorgan talked about it, Ken Griffin of Citadel talked about it, Paul Tudor Jones talking about it, like the biggest names across the board. They all had a different approach to how you should invest, to hedge against this debasement trade. Every single one of them had Bitcoin in them. Almost all of them had gold in there. Some had silver, but Paul Tudor Jones included NASDAQ because he thinks that, all of that value will just pour into tech stocks. That's where investors are used to throwing their money. The Mag7 is the stock market at this point. So there's an interesting argument to be made for sort of this everything rally. If you're saying gold, Bitcoin, and NASDAQ, you're basically saying everything continues to go up in this crack up boom. I think it has a huge impact. And at the same time, you have, I think, $7.5 trillion sitting in money market funds, earning a yield that every rational person knows is going to drop. right? Like, you know that rates are coming down. You know that even if Powell is somewhat resistant as rates come down, that, as you said, once we get the Trump puppet in May, it's going to come down massively. All of that money is going to have to find a home that's not in bonds, right? And so 7.5 trillion will be coming off the sidelines, regardless even of how much liquidity the Fed or the central banks inject. It just really is a very rational setup for more liquidity coming into markets. And the people who are sitting in the $7.5 trillion of money markets are not like poor people struggling check to check, right? I mean, these are investors who move their money actively between markets to say, listen, I don't want to be in stocks right now, so I'm going to go earn this yield, or the yield is high enough that it justifies not taking the risk on stocks. When that yield comes down and no longer justifies holding government debt, people are going to have to find somewhere for their money. Where's it going to go? Into assets. That doesn't, listen, there could be more sellers than buyers even in that situation, but the setup is there for sure. And yes, I think that debasement trade is a growing conversation probably with people and their investment advisors, and they're going to be starting to look to rebalance those money markets. I'm literally looking, by the way, Bitcoin broke 100 like November 24.
November 24,
just $6 grand over 100 right now.
Yeah.
So we're within 6% of the price 50 weeks ago, not 52 weeks ago. So not quite a year. Like, and it went to 74 in between there. And then it's kind of held 100 now for, the bulk of the year. But Bitcoin hasn't really gone up in a year. I mean, there was a point in, I'm looking December, like right around Christmas, where it was 109. Remember, it topped at 109. That's above the current price at Christmas last year ish. Yeah, it's been a pretty good, and gold has, done what gold has done. The S&P is up massively. Everything's up, and Bitcoin really isn't. And altcoins are down mostly. I haven't looked at Ethereum on the weekly, I don't know where Ethereum was exactly a year ago, but I think it's even down from that. Well, no, I guess Ethereum coming into last year was down in the 20 somethings, but I mean, by March, Ethereum had hit, 41, and we're down from there, obviously.
Melker makes it clear he's unfazed by Bitcoin's flat price action. He's buying every dip, prefers accumulating at $100,000 instead of $130,000, and would gladly buy more at $80,000 or $75,000. Short-term volatility doesn't matter to him. His conviction is long-term, and he expects Bitcoin to be much, much, much higher in the future. What surprises him isn't Bitcoin's movement, but the government's ability to manipulate markets and keep risk assets elevated. For years, analysts called for recession and predicted Fed pivots that never arrived. Instead, policymakers keep pulling levers to extend the bull market, and investor sentiment has split into extremes: total euphoria or total doom, with almost no middle ground. That confusion is reflected in market psychology. Melker points out that the S&P recently hit a new all-time high on the same day the fear and greed index dipped into fear, something he can't recall seeing before. Crypto is even worse, with Bitcoin in fear and altcoins in extreme fear as they print new lows. At the same time, gold is experiencing a historic rally, the dollar isn't collapsing, tech is soaring, and nothing fits the old models of correlation. Stocks and gold rising together shouldn't happen. Uncertainty is everywhere, and markets hate uncertainty. Let's get back to the interview.
I'm buying the hell out of Bitcoin dips. Like, I love this. I want lower. I have cash on the sidelines. When I earn money, I want to buy Bitcoin with it. So I would much rather do that at 100 than 130. So, like, nothing that's happened with Bitcoin price action has shaken my conviction there that that's going to be a good asset to hold over the long term. Again, if it goes to 80, I'm buying. If it goes to 75, I'm buying. So I'm not talking about immediate price appreciation from here. Nothing would surprise me in the short term, but long term, I expect it to be much, much, much higher. So I'm enjoying that price action and doesn't concern me. And I have high conviction there. I think what confuses me, if that was the question, is, I won't say I'm confused. I will say I continue to be surprised for years now on the ability of the government to manipulate the market and find creative ways to make sure that things go up, and to, like I said, pull this lever a little forward and pull this one a little back to just keep the party going nonstop. I mean, where's the recession we were promised for the last 2 or 3 years, right? How wrong were people on their predictions about when the Fed would pivot before it became so obvious? Literally years where we saw next meeting 85% and they didn't cut, right? And so I just think that we're at this extreme bipolarity in opinion. It's nobody's like it'll chop sideways. It's either on very extremes. It's almost like politics, right? You have one side that's so bullish, it'll never go down. Even if we get the debasement trade, everything goes up. And even if things go bad, everything goes up because where else is your money going to go? And the other side is literally at like the fourth turning Great Depression. Then nobody's like, it'll just kind of go up or down 5% the next year or two, right? It's like doom on one side and complete euphoria on the other. Something I found really interesting last week, if you want to show the level of confusion, not necessarily to me, but I think to the market in general, was that the fear and greed index for the S&P dipped into fear on a day when the S&P made a new all-time high.
Really?
So yes. So usually, obviously, at all-time highs, you're experiencing greed and it's ticking up. I can't remember in tracking that metric, which is not something I look at every day, where the fear was growing as the market was rising. Right. A very, very strange thing. Obviously, crypto is in extreme fear at this point. Bitcoin may be fear, but if you look at the whole crypto market dipping towards extreme fear, and that makes sense when altcoins are making new all-time lows, right? But very, very, very confusing for the market to be absolutely ripping and people to be fearful writ large. Very strange.
And where do you think that comes from?
Because none of it makes any sense.
Yeah.
Like you can't, there's no way that you can kind of like consume all of the data that exists and then, the data, the sentiment, the research and make sense of it because so much of it is so conflicting. Like gold having a historic rally should coincide with stocks dropping, right? You shouldn't have those two things both rallying together. And the dollar was down, but it's not like dying.
It's not down that much.
Right. And
it's actually kind of up right now. It's creeping up right now.
Yeah. And it's had kind of a nice bump. So I just think that the old memes of the past, the inverse correlation of markets to dollar strength and gold ripping from under 2,000 basically to over 4,000 with barely a break when you consider the size of something like gold. I mean, you're talking about like 12 to 25 trillion in market cap. There's, for anyone who, by the way, says, that like Bitcoin can't 10x because it's too big already at 2 trillion. Okay.
Yeah.
Okay. Gold's like, hold my beer and my bottle of tequila because it can happen. Right. And so I think that there's just no way it's very difficult to make an educated guess on where markets are going next. And I think that naturally breeds fear because, markets hate uncertainty, but if you have a bunch of uncertain participants, I think everybody just kind of got their finger on the trigger in both directions. Like they don't know which one they want to pull, like the buy or sell at any given time. Like, do you feel confident buying a bunch of stocks right now? Like, is that?
Despite the confusion, contradictions, and emotional extremes, the underlying picture points to a market searching for direction while sitting on massive fuel. Bitcoin hasn't broken out, altcoins are bleeding, stocks are at all-time highs, gold is ripping, and traditional correlations are completely broken. It feels irrational because it is. But fear itself becomes a form of pent-up energy, especially when sideline capital is huge, uncertainty is universal, and every participant is waiting for a clear signal. Whether the next move is explosive growth or a sharp reset, the pressure building beneath the surface suggests that markets won't stay quiet for long. If Bitcoin continues to stay flat while other major assets keep rising, does that set the stage for a delayed explosive breakout? Or could it signal a deeper structural shift in how Bitcoin behaves in the market? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support and we hope you enjoy the video.